when you remortgage, it's the perfect opportunity to completely reassess your options.
Hi guys, welcome back to our podcast, talking all things mortgages from Reside. Today we're going to kick off talking about remortgages, which is it's quite a big thing at the moment as well, with sort of rates and stuff like that. Darren, do you want to kick us off? What is a remortgage? What do I mean when I say remortgage?
So essentially, a remortgage is taking one part of your loan, sticking it on another deal with another lender, hopefully a better deal. But given the climate at the minute, it's probably going to be a little bit higher than what you were previously on. But yeah, it's effectively you've come to the end of your current deal, and you're looking to remortgage, move your product or change products basically to another lender.
Cool, perfect. And then Steve, when obviously Darren says come to the end of the deal, what is that? So people take a fixed rate and then that ends?
Yeah, exactly. So typically people would fix in for a certain amount of time, be it 2 years, 3 years, 5 years, a bit longer, and then that will come to an end on a certain date, and it's at that point that you can line up a new remortgage. But obviously, just to mention, everyone doesn't just fix in. Things like tracker rates as well, variable rates, they also have an end date where you'd revert over to the standard variable rate if you didn't do anything about it at all.
Cool. What Steve just said, standard variable rate. Rav, do you want to talk about what standard variable rate is and sort of what the benefit of remortgaging before you go on to that is?
Standard variable rate is lender's effectively own rate of interest. So which we also refer it commonly to SVR. And that's based on what the Bank of England's base rate is, their internal cost, and that's a specific rate that they will offer as their own private rate to any of their customers, right? Often when you take the mortgage, you get deals which are either on fixed rate, which are much significantly lower than the standard variable rate. So the good idea is that once your deal comes to end, rather than moving on to a higher standard variable rate, you would want to move on to another sort of a fixed rate or tracker rate, depending on what your circumstances are or your preferences, which in most cases tends to be lower than the SVR or the standard variable rate.
Cool, thanks, Rav. Yeah, so I think essentially a SVR is just a higher rate, isn't it? That lenders go on to if you don't do nothing when you come to the end of your fixed rate. So it's good to avoid going on to that. Darren, what's the remortgage process? What would a client need to do, and what timescales would you be looking at for a remortgage?
Yeah, so I think it's important to base it around timescales. Typically, what somebody would do when you've got the end date, so you've looked at your deal and it says it's going to be 31st of December, you typically want to start looking at deals sort of 6 months before that. Bearing in mind that it's a good, when you look into remortgage, it's a good opportunity to review your options on a whole. So you might be thinking about future plans, kids, etc. So getting the mortgage side of it sorted out early on is a good step, because if you're looking to fix, for example, the benefit of that is that you can secure your product then and there. Most mortgage products are offered for 6 months.
Yep.
So it sort of would cover you until you sort of need to transition over to a new product. But the benefit is that once you've secured in a product, it's kind of locked in. So if rates start to get better, you can obviously switch. But if they get worse, you're not impacted because you've already locked in.
Cool. So when you say you've locked in your rate for 6 months, it protects you from that. On the other side, if rates start to get better, are you still locked into that rate, or can you switch over?
Yeah, you'd be able to switch over. If you've got enough time, you could probably even look at a different lender. But typically, you can, it's quite easy to speak to your broker, switch product to whatever's preferable at the time.
So top tip is to arrange it within plenty of time. Give yourself a good amount of time.
Yeah.
Because typically, remortgage, that it's a legal process, so that can take 6 to 7 weeks. So you want to sort of make sure that you have the timing right in terms of the remortgage itself.
Cool. I think just to pick up on a couple of things you said there about if you lock in a rate, that's why there's a benefit to using a broker there, because if you do it yourself, you lock in your rate and you leave it for 6 months. Whereas if you use a broker, they'll lock in a rate and they'll review it sort of on a monthly basis just to make sure that you're still on the best deal.
Yeah, because I think if you're going to do it on your own back, the chances of looking at it again or trying to look at the market again, you might be tied up with family commitments and stuff like that. Whereas a broker, that's their job. Their job is to review the market. If there's something better and it's beneficial to the client, we're obviously going to push it forward to you and hopefully get you switched over. So,
and I think with a broker, obviously we know ourselves, we've got access to over 90 lenders and sort of 20,000 products. So we always sort of search the market to get the best deal.
Yeah.
Steve, Darren mentioned that it's a legal process there. I think the amount of customers that don't realise that you need a solicitor involved for a remortgage is quite high, I think. What is the solicitor's role in a remortgage?
It's quite a simple one. It's nothing as complex or time consuming as when you buy a property. But when you remortgage, the solicitor's obviously moving the funds from one lender to another, and also amending the charge on the land registry.
Yeah. So yeah, essentially it's like a legal transaction, isn't it? From one bank's taking over the charge to the other. What would a customer have to pay for the solicitor to do that?
There's usually fees. Even when you say that there are, or even when lenders say there are free legal work or fee.
Free standard legals.
Yeah, or fee assisted legal work. There's usually a few charges that crop up that they don't really mention at the forefront of things. But yeah, it's not a huge amount. You know, it's typically a few hundred quid to remortgage. But yeah, there's usually a few fees to pay.
Cool. And then obviously the customer's got the option. You can go for the lender's fee assisted or free standard legals, or they can just appoint their own solicitor.
Yeah, they can do. Some lenders will give you a bit of cash back as well. So if you use your own solicitor, they'll give you a few hundred quid towards those costs as well. And then you can find your own and do it that way, which is usually a lot quicker and a bit better for yourself as the person who's remortgaging, because the solicitor will act for you rather than for the lender, if that makes sense.
Yeah. And again, I think that's another benefit of using a broker. We sort of act like a one-stop shop because we can do the remortgage and also put you in touch with a solicitor.
That's right.
And we can get you a quote that matches the cash back. So essentially, you're not really going to be paying for your solicitor if the lender's going to pay for it.
Exactly. It covers it essentially. The cashback will cover most legal packages that we can help with. Yeah.
Perfect. Rav, in terms of the remortgage process, we've spoke about sort of switching to a new deal. Do you have to remortgage to another lender, or is there sort of different options available to the client?
You don't always have to remortgage to a new lender. You'll often want to see what your existing lender offers, and use that as a baseline to compare the rates in the market. Sticking with the existing lender is easier because you already have a mortgage with them. It's just a case of taking up a new deal and signing a small little form to confirm that you're happy with the new deal. But if you know what your existing lender offers, becomes your baseline to compare rest of the market and see whether it is worth moving into and going through the whole process of remortgage to a different lender. You always have the options to stay with your own lender. Sometimes your circumstances may dictate that you have to stay with your own lender. So there might be a case where you had a recent issue on your credit file, or there was a drop in income if you are self-employed, or you were employed, or there was a redundancy announcement in your jobs. These all cases will mean that you can't move to a different lender, and in that situation, your existing lender will still offer you a new deal, subject to if you've made the payments on time.
Yeah. So I think that's quite important. Obviously, like you say, if there's circumstances where your income's changed or you've took more credit, you can still sort of secure a new deal with your existing lender. But again, it's always good to speak to a broker just to assess your options as a whole.
Yeah, that's called a product switch. So like Rav said, as long as you're up to date on your payments, most lenders will be able to offer you a switch in rates quite easily, no underwriting, etc. And there's a couple of things you could even add to it, change the term these days as well. You never used to be able to, but you can amend the term if you're switching products. They usually don't, like I said, require any further documentation or underwriting. So it's a good option to have, and it's something we'll always check as brokers. We'll always compare what the market offers against your existing lender as well.
Yeah. I think it's what Rav said it is quite easier and it is quite quicker. So you've got to weigh up what your preference is, whether you want ease and convenience or the best deal. Yeah. And I think that's good where we come in, because if it's going to save you, say, a couple of thousand over 2 years, then it's worth switching. But if it's like 100 quid or 200 quid, then it might be worth sticking with your existing lender for the product switch. In terms of, I just want to pick something up, in terms of the documents, although the lender doesn't need documents, we still will need sort of the regular documents like 3 months pay slips, 3 months bank statements, because we have to do a full sort of review, don't we, and check the affordability with other lenders. And if it doesn't fit, we can always stick you with your existing lender on a new deal. Darren, when you remortgage, is it just a case of switching your existing balance, or is there sort of options to sort of if you need to borrow more?
Yeah, well, I was going to say actually, there's a common misconception when somebody's a first-time buyer and they take out a mortgage for the first time. They feel that sometimes, not all the time, but they feel like that is the term that they're stuck with. For example, so you take a 25-year terms in 2 years, you have 20. No, so when you remortgage, it's the perfect opportunity to completely reassess your options. You might have got married, you might have had family changes, have a new job. You know, you can always alter the term as long as it fits within policy with specific lenders, of course. So I think it's always important to speak to your broker because they're going to know where to place you, or just give you general advice of what your options are.
I think that ties in well with your protection as well.
Yeah.
For example, if you might have taken your first mortgage and not taken protection, but then by the time it comes to remortgage, you could have got married, you could have kids. So it's always a good time to review any protection, any life cover, critical illness cover especially. And also if you've changed employers and you had good employee benefits like sick pay, but you've not got sick pay, now it might be a good time to review your income protection as well.
Yeah. Just touching on your point about whether you have to switch the balance. No. So you might be looking to remortgage, raise some capital, do some home improvements. If you've got an equity loan, Help to Buy equity loan, you might be looking to pay that off. So there is options, but it all sort of boils down to affordability and sort of checks, your income, your expenditure. Again, this is where the broker comes in. So, yeah, there's always options to increase your borrowing or even reduce it if you think you've come into some sort of
good point.
cash as well. So yeah, it's the perfect opportunity to reassess the whole mortgage on a holistic view.
I think a lot of what we're seeing at the moment as well, especially with rates as they are, is a lot of people are maybe extending their term as well. Just sort of, obviously we've got loads of people who we fixed in sort of 3, 4, 5 years ago on rates of like 1.49, 1.59, and these rates are sort of, it's a bit of a shock to the system.
Yeah.
So you can extend your term if sort of your monthly payment is a bit high, you can extend it. But then obviously you have to explain that you will end up paying more interest over the term. But then it all depends on your preference, doesn't it? In terms of remortgage, is there any fees to pay to sort of lenders? Like, what sort of fees would you sort of come across?
You asking me?
I'm looking at you, mate.
So typical, just standard fees associated with mortgages, really. So arrangement fees are quite common, depending on what the lenders offer. So arrangement fees are applicable in some products. Valuation fees, you might have to pay a valuation fee to the new lender. And then it's just the standard associated with purchase mortgage products, really. So there's chaps fees to pay still, and then maybe redemption fees due at the end of the fixed or product term as well. So yeah, nothing out of the ordinary on that side of things.
And then with the arrangement fees, I mean, these can typically be 999. Is that payable upfront, Rev, or can a customer sort of add that onto the mortgage?
No, it's not payable upfront. You always have option to add it to the mortgage, except that when you add to the mortgage, you will pay interest on that part of the fee that is added to the mortgage as well. So if you have the means, you could pay it, or if you are in a market where you're not sure whether you wanna keep on moving around different lenders because you're quite early in process. Let's say you're in 6 months earlier in process. In that situation, you may want to add it to the mortgage.
Yeah,
it makes it easier so that if you want to cancel a deal, you don't have to wait for the refund or anything for that to come through. So if you add it to the mortgage, you can shop around a lot more easier when it comes to like better deals, right? Or you can add it to the mortgage just because it's an upfront cost, but you can also pay it off as soon as the mortgage starts, for example. So there are a variety of options available, and it is not to be paid upfront, but it is nevertheless is a cost.
That is a good tip, adding where you can add the fee onto the loan. It's always a good idea because most fixed rates will allow you to overpay by 10% of the balance each year. So it's like Rav said, acts as a bit of a safety net for you. If you add it to the loan, it's not due up front. If you pull out for any reason, you're not chasing around, £1,000 worth of refund. And
some of them are non-refundable as well, aren't they? It says on the illustration.
Yeah, some of them are. Yeah, exactly.
So if you're a bit far out, it is always sort of worth adding it on, isn't it?
Yeah, and then like Rav said, when you complete, just overpay by the sum of the fee, and you reduce your mortgage by that amount, and you don't pay interest on that extra amount, which is
cool.
Perfect.
And then in turn, we've looked at the timescales before. So obviously you can start looking 6 months before. Darren, how long sort of would you anticipate it takes to, one, get the mortgage offer in place, and then two, for the legal work to complete?
So every lender, it depends with their service levels. They might be inundated with applications that they've got going at the minute. I would say typically give yourself about 2 to 3 weeks. 3 weeks being sort of quite long
For an offer?
for an offer. But having said that, there's some lenders that would be able to issue it almost like in a couple of days. So it all depends on the lender itself. But if you're looking at the legal side of it, then that can take typically about 6 to 7 weeks, I'd say, on average. Some work quicker. But I think another important thing for consumers out there who are looking to remortgage is that when you are speaking to your solicitor, always make sure that they have the date that you need to complete by, because then they can prioritise the case. If you need to get moving because you're completing in 6 weeks, then they'll obviously get things moving quite quickly on that as well.
I think if a customer's left it late like that, they've got 4 or 6 weeks, it might be worth looking at the product transfer that we discussed earlier. Because the worst thing is if you run out of time and you go onto that standard variable rate, your payments could sort of go up by quite a significant amount.
Because you'd land on the SVR, which we mentioned earlier, right? So what David means by that is your fixed rate, if you're paying 2-3% or whatever, suddenly goes up to 8%. In the blink of an eye. So it's you need to factor that in as well, because that's a hell of a jump.
I mean, every SVR is different, isn't it? But it will always say on your mortgage offer, the original mortgage offer, what your rate will go to and what your payments could do. It's always good to keep an eye on that to make sure you get in there. In terms of, I just want to go back to fees, because obviously when we remortgage, there's thousands of products that we look at. What will you say a customer should look out for? I know we can look out for it, but you obviously see products with a fee that come with a slightly lower rate or a higher rate with no fee. That's when you start looking at overall cost and true cost, isn't it?
True cost.
How would you explain that to a customer, Steve?
So we always recommend products based on true cost. So for example, if you're going to go for a 2-year fixed rate, if that's going to suit you best, we're going to look at your monthly payment times 24 months plus any fees, less any cash back. That figure there is the true cost over 24 months, so 2 years. So we compare that against everything on offer. And usually with the one with the lowest total there wins. And that's the best product for you. Obviously, there's other things to bear in mind. Once your mortgage balance gets quite low, then interest rate does become applicable. When the overall term is quite low, then of course interest rate becomes applicable. But true cost is the easiest and best way to kind of blanket evaluate the products on offer, I think.
So I think just with that, consumers do fall into the trap of like wanting the lowest rate. But if the lowest rate comes with a 3% fee, then it might not be worth it.
Not funny on a £500,000 mortgage.
Yeah, exactly. So I think it's important just to weigh up, the interest versus the fees, etc. So.
I mean, the amount of times we have a customer say, I've seen this rate online, I want to get this rate. But when you dig a little deeper, there's added fees, which means it's not that attractive overall.
Or it's a discounted variable.
We love a discounted variable from Money Supermarket Expert. Cool. So in terms of remortgages, it's quite an important thing for customers, I think, because they get their house, they say 2-year fix, that comes around really quickly. So it's always important to I'd say the key takeaway points are be organised, get it done on time, check the market, check your existing lender, check the market, because sometimes we get people that they're overly loyal to their existing lender. They just think, oh, do you know what, they've helped me with my mortgage, I'll stay with them. It could end up costing you hundreds of £1,000s if you don't remortgage. And then also be aware that you're going to need a solicitor in place as well to handle the legal side of things.
Speak to a broker and leave plenty of time, I think.
Cool. Nice one. Thanks for that, guys. And we'll see you soon.